Hi, welcome to Know It Olly ELI5's day trading and swing trading. There's a slight difference between the two. A day trade is when you trade in and out of trades daily. You're doing at least 5 trades per week, and that means a buy and a sell to open and close a trade. A swing trade, typically you're doing much less often, 1 to 2, maybe 3 times per week. You're more looking at 5, 10, maybe up to 15 trades per month. You're spending a little bit more time finding stock with momentum swings in to place your trades, whereas day traders sit there and stare at their screen and try to basically do buys and sells on minute to 5 minute or 10-minute charts and try to make small profits numerous times per day. Whereas a swing trader tries to wait for a trade to come to them and then they just climb onto the momentum that swings up, or momentum trading is another name for it. Day trading can be seen as a job because you're spending so much time doing it, so it is treated like one by the majority of governments around the world. So you are taxed differently. There are certain accounts that you're not allowed to use. You can't day trade through a tax-free savings account or an RRSP, IRA account. Those just they don't let you do it. You can, for the most part, swing trade in a lot of those, but that's also up to your broker. So make sure that you do your own research to figure out if you're allowed to swing trade with your account or not. The 90-90-90 rule. 90% of traders will lose 90% of their money in the first 90 days. Just in case you're thinking about starting day trading and swing trading, if you don't get a course or an education, then you're likely to be one of the 90% that loses almost everything. So swing traders, they go for the meat of the price movement and they wait for momentum. So all of these links that I will quickly pop up on the screen here can be found on my webpage, all the show notes and everything, and there's a link in the description for that. So if you wanted to do more reading and having a look, checking out these sites, then go there. So for a little bit of an example with the charts here, I have a swing trading buy sell indicator in here at the moment. So this indicator gives you, this is a bare bones piece of indication where it gives some advice, but you're supposed to look at these indicators and use a number of other indicators in conjunction with them to decide whether or not to trade. For example, you've got this buy right here in the middle, but when you go down and you look at our two indicators just here at the bottom, we've got overbought, so it's likely to drop with its price on this one here. And we're also going from green into the red on the MACD. So this buy right here, I wouldn't have touched. This is just a general indicator, and you need to look at the other things. So if we come over here, you can see didn't get the bottom piece of the price movement, left that behind. We're not getting the bread, we're getting the meat and the cheese that go in the middle. So this one here was the buy. I would look down here, I would see that I'm green in my RSI, and I have crossed over on the MACD and I'm going green there. This one would be considered an actual buy. However, you always have to protect yourself from losses, so you'd use a stop loss in this just in case it went in the wrong direction, because there's no certainties with any trading anywhere in the market. But this nice little piece here, as you can see, up to this sell, you can see it didn't get that piece on the top. That's because momentum and swing traders typically wait for a change in momentum. They want to make sure that it's actually kind of dropping before they get out of the trade. So this one here, that's still 6% in a very short space of time. And you could have put a stop loss or a moving stop loss on that to make sure you were protected. So if I come back through here, like we got another buy here, that's kind of iffy. Maybe you would, maybe you wouldn't. That's a little bit different when you're trading in real time, right? But still, that's a percent. We have a good one here. You look down at the other two indicators, they look like it's not the worst. Entry point, go up to the sell point, that's almost 5% right there. So the idea is you use this momentum along with a number of other indicators to put together an idea of where the price will go. And these swing traders, as you can see, they don't try to get this bottom. They don't try to catch a falling knife. They don't try to hit the peak. Swing traders will get the meat in the middle because it's the best way to protect yourself from losses while also give yourself a greater chance of making money. Even if you're really strict with your swing trading, even if you only win 50% of your trades, you should have stop losses that stop you from losing too much money, which means that your wins outweigh the losses. And even if you're only winning 50-50, you're still able to walk away with some money and you're definitely not losing it. So if you're wondering where this indicator comes from, I'll pull up the guy's site here, his YouTube channel. This guy is Jay Bravo. He's ADHD and has epic hair. However, he is very strict with his trading rules. He has a number of courses that you can do. I've done 3 of them, and at some point I'll do a review video for them all. But he has the idea of start a business, invest the money you make from the business into the stock market, and blow profits from the stock market on Lamborghinis. So this guy's been starting a new business every year for the last 20 years. As I said, he's ADHD, so be careful watching too many of his videos in a row. You'll think you've just chugged 12 coffees. Check out his YouTube channel. He actually describes a lot of the techniques that you would need to make sure you don't at least lose money in the markets. I would highly recommend. And if you do have enough to pay for his course, I would also highly recommend that. As I said, I'll do a review, but the point is, in 45 days, I was completely back to even with the mistakes that I had of being about 40% down at one point. I still managed to, using this technique, come back to flush in about 45 to 50 days, I believe it was. The really good thing that he does is he tries to take emotion out of it so that you have very strict rules that you go by and you don't allow those rules to budge, because in the long run, if you follow those rules, you'll make money, or at the very least, you won't allow yourself to lose all your money. So that's why I recommend this guy's channel to go and check out if you're just getting into trading or you're wondering about how to swing trade. Check out this guy. If you already know a lot about market mechanics, then just watch a few of his videos. You probably don't need his course, but you'll get the idea from watching 3 to 4 of his videos when you go through and you look for the technical analysis section that he does in each of his videos. Because even with those indicators that you can see here, there are still at least a dozen different indicators to check before you would actually act on any of these buy sell indicators that you see here. So you got to be safe and you got to protect yourself, and you've got to make sure that at the very least you don't lose all your money. So that is swing trading, day trading. Know it, Ollie out.